What's good, gang? My name is CJ Soup, and today is the educational video of the week. I'm going to be going through how to trade CRT, also known as candle range theory, originally brought to the trading community by the one and only Romeo on Twitter. I believe a lot of what Romeo talks about, he has a lot of fucking sauce on his Twitter. If you have not just scrolled through his Twitter and just taken notes on stuff that he's talked about, I highly recommend to do that. I've done that also on his Telegram group as well. I've done that, just scrolled through a bunch of posts, just a bunch of sauce in there, bro, and just a lot of intricacies of the market. You can learn a lot. So today we're going to be going over his concept of CRT, how you can use it for bias, how you can use it for entry, and just overall how to trade it. Because the great thing about CRT compared to just original ICT, it's still ICT based, but this is like another branch of like how to kind of think it and look at it. Because a candle range is talking that you're going to be trading from one side of the range to the other, which is basically what turtle soup is. And what candle range theory does is it already implements time. It already implements time into the equation, because a candle forms at a certain time and lasts for a certain amount of time, which we'll go into. So that's what the topic is today. Let's get into it. So to start out, I want to go through this image. This image was uploaded by the boy Sham, also on Twitter. He's a proponent of Romeo's CRT, and he purely trades CRT. I kind of look at a few other things, and he's strictly CRT, but I use candle range for TPs, for bias off of a higher time frame CRT, etc. So what you can see here is that right here it's showing that this full range is a candle. Imagine this being a daily candle or a weekly candle, and then all these lines here is a lower time frame playing out, making this big candle. Imagine this to be another candle. Another candle will open here. Say this is a bearish candle, and like this is the close of the bearish candle. You'll have a range of the new candle, a purge, turtle soup, of this candle range into a higher time frame key level, which is what everyone misses out. And that's what I was talking about in my first video. Everything still applies, but now it's a bit more of an objective view. So you can expect where is price going to go from here. So you have the turtle soup of the previous candle, higher time frame candle being a CRT, and you can expect movement to the opposing range of the CRT. The only candles you want to use as a CRT that's actually worth it would be a daily, a weekly, or a 4-hour candle range. That's how you can get an actual solid move in the market. Now, when I'm trading futures and I'm scalping on NQ and ES, sometimes I use an hourly, sometimes I use a 15-minute, just depending on the situation. But preferably, you want a bit of a higher time frame candle to use as the range. And we'll be going a bit more into this. I'll show like a live example of like the actual sequence of how you can expect price to move from a turtle soup liquidity low to the external liquidity opposing, being the opposing candle range, to be more objective. But just to rush through it, first entry, you'll have a turtle soup at a key time. And like I've talked about before, a key time just means an opening of a significant candle, whether that be a daily candle or a 4-hour candle. So if we're talking about forex, that means 1 a.m., 5 a.m., 9 a.m. New York Eastern time, you can expect the turtle soup to occur. After that, you'll have the order block entry, also known as Model 1. And then you'll have an OTE entry, being a breaker entry. And lastly, just before the liquidity is hit, you'll normally have a KOD, being a kiss of death soup, just being the last turtle soup which occurs before the doll, the draw on liquidity, being the external range liquidity of the opposing end of a candle range, to be hit. Okay, so that's the theory side of CRT. And now we're going to be going into the actual chart, because seeing it live in the actual chart is how you'll be able to train your eyes to see it. Romeo goes a lot into like specific examples, like the 3 candle model, or it's just like a big candle here, a purging one here, closes there, and then the other one just ends up going this way. But most of the time how it happens is it's just a big candle and then a purge and immediately back the other way. Like, it's very rare that I see an actual 3 candle model. It happens, of course, but like more of the time you'll just get like a 2 candle model. Okay, so the example I want to use today is going to be on EU, and it's actually two CRTs in one, which is why I want to use it as an example. And I guess we'll see if the second CRT is playing out. I'm currently in this short here from the highs up here, and I'll tell you why going over it. So, yeah. But first, we're going to break down the bullish CRT, which has already occurred. This is a 2-day time frame, because the higher the time frame the CRT is occurring on, the further the TP can be that you expect, because since it's a bigger time frame candle, the opposing end of the candle range will most likely be further away or the same, depending. But on the daily chart, you can see that the daily CRT would have been this high. But if you change to the 2-day like it was on before, you can see that the end of the opposing candle range is further, so you could scrape out another 10 pips. So why not? All right, so starting on the weekly, what do we need? We need order flow, we need higher time frame key level, we need time, and we need turtle soup, aka liquidity. Order flow is bearish, clear as day. We're bearish, we're coming down, rejecting highs, breaking lows, same as always. So this is a counter trend trade, but that's okay to take counter trend trades, and I'll show you why. I'll show you why it was in this way. So we have time. So firstly, the order flow is bearish, and then I'm going to go higher time frame key level, and then we'll go into time. Because higher time frame key level is a bit more the reason why counter trend trade made sense in this situation. So what's the key level? We have a weekly breaker here, or a weekly model 1, you could even say, using the wick. And if you've studied ICT, like I expect that you all have in the core content, an order block, you can use the top or the bottom of a wick of an order block. When the wick is a significant wick and a small body, you can use the wick. And in this case, it worked. Now, I'm in the short betting that it's going to continue going down. But when you tap a key level, you can expect a significant reaction. And that's the trade that you need. Not meaning that that's the bottom of the market and we're going to go all the way up here. No, but you will get a certain reaction to take out the opposing end of a candle range. That's the goal. That's all we're trying to aim for. Weekly time frame, that's the key level. This is a counter trend trade, so you'll most likely be going a little bit less size. I did not take this trade, by the way, but it's an example that worked, right? I took the other trade going with order flow because that's more with my rules and what I'd prefer to take. So I'm currently in the short right now, holding over this weekend. It's currently Sunday, 19th of January. I'm holding this trade going short. I'm in the trade right now. I'll actually show you on that 10K forex account. I'm in the trade right now, hovering about 400 to 500 bucks. I'm in the short right now. Okay, so anyway, so going to the 2-day chart, we're using this candle range right here. So this is the purge of the low, and we're aiming for this high. Okay, going to the daily chart. Daily chart, you can see what actually is a 3-candle model. You got the accumulation candle, the purging manipulation candle, the turtle soup candle into the higher time frame key level, and then you have the opposing end here. And what makes this better is that there's an actual key level here, which is what I shorted off of. That was the target. You can either trade to the key level or away from the key level. Write that down. Write that down. So this is a trade, a counter trend trade going to the key level to preferably, what I'm hoping, continue the trade or continue the order flow of where EU is going, right? So you got the purge here targeting this 2-day opposing candle range. So that's CRT. So you have the purge into the higher time frame key level moving up. Now, how can we break this down even more? How would you know that this would work and this wouldn't work? Like over here. Like, I'm not just cherry picking shit. I will tell you why one works, why one doesn't. Why did this work and this one didn't? Why? Okay, well, always goes back to time. I am not getting enough views on these fucking videos. I'm spitting so much fucking sauce, bro. So much fucking sauce. All these fucking trading gurus, mentors and shit, bro, they don't know fucking anything, bro, because it always goes back to time, bro. I want you to go back test everything you can that I'm talking about when it comes to time, because it's all fucking facts, bro. It's all facts. This shit is ran on time. This is why ICT from the get-go has been talking about time before price, but he never went into the fucking detail. And that's why all these ICT traders are still fucking failing, bro. They're all fucking failing because they don't know what time actually means. And Romeo is trying to fucking open our eyes to it. And I've actually realized what it is. And I'm just spitting it flat out right. This is what it means. Okay, so getting back into it. So why did this work and this one didn't? Okay, when did the purge occur? This purge occurred on a Friday. All right. This purge occurred on a Monday. All right. So what's the difference there? The difference is that this occurred at the end of the week and this one occurred on a weekly open. Write that down, please. I am telling you how to quit your job, bro. I'm telling you how to make millions of dollars right now, bro. Write that down. Openings of candles pretty much tell you where price is going. How the candle opens will tell you where it's going. All right. I almost don't hope I get views on this video, bro. I almost hope I fucking don't, bro. So then I can keep this sauce to myself and the few people on Twitter that know this shit as well. I'm hoping I can just keep it. Anyways, because what did this candle do? So this candle opened on the Monday. It's Monday here. And it closed on, well, this Friday here. What did it do? Open, high, low, close. That's how a candle forms. Open, high, low, close. So would you expect the low to go back up to the open if you're expecting a bearish week, which is what the background of this week was? This was like a 2-week SIBI here, whatever. It was extremely bearish. I actually took this short here, doing this CRT here that I actually had marked out from before. So that's how this week played out. So you always want to play the weekly candle. What's the weekly candle doing? So this one, the purge occurred on Friday. So you don't expect it to get to the opposing end of the range. But how Romeo even went into this as well. You can expect the 50% of the accumulation candle to be reached, which you can see did occur. We did pass the 50%. So if you took this purge here and you got in, bang right there, I'm sure on the lower time frame, there's a bit more confirmation. Say you get in there, stop at the low, targeting 50%, you can still get a solid 1 to 5. Bang. So you have that option as well. But I'm more trying to trade candle range for like the actual bias. I go with order flow. I want to target the actual opposing end. So that occurred on a Friday. This one occurred on the Monday, meaning that this week opened high. This week opened high, and we had an SMT at this high here, being the open high purge, low, and we didn't have a close. But the opposing, or the next week, opened low. The opposing week on this Monday opened low, purging into a higher time frame key level, which is valid, to then open low, high, close. And you can see, notice how when we tap the key level, it's such clean price action all the way up until the opposing candle range into this higher time frame key level to then start the short again. Every entry is an exit. Every exit is an entry. Always think of your exits as another entry. I saw this playing out and I'm like, that was a solid long entry. I'm going to enter where they should be exiting to go back with the order flow. And that's why I'm in the short here, already up $500. Yeah. And notice how when the weekly objective is met, price will start just fucking around. Clean action. Open low, all the way in, close, high, big volume candle on the daily, purge, bang, that's it. And then the 2 following days after that, complete shit. Complete shit. Because the higher time frame key level is already met. The week has already done what it needed to do. It's all algorithmic, bro. Buying, selling, pressure, my ass. It's all algorithmic, bro. Like, of course, it's only clean until it gets to the high time frame key level, and then it's shit, waiting for the new weekly open to occur to then start moving again. Cleanly. I'm even a little bit worried, being fully transparent, that we might actually come back up and purge this for a new weekly candle to open high, purge, or SMT, and then go lower. I got my stop up there, but if I get stopped out, it's cool, because then I'll just enter short again. It's fine. Make it back, and a lot more. So that's why this candle range worked out. Okay, lastly, so I've shown you an example of how a CRT would not work. I've shown you one where it does work. I've shown you the logic behind it. I've shown you the bias behind it. See, because this is a daily time frame. This is how it works on a daily time frame. If you go down, you know this logic, and you go down, now you can scalp. You can scalp now because you know what the higher time frame wants to do. You know the higher time frame is aiming for this high up here. So what do you want to do? As soon as you start seeing price go back up into here, And you got the new daily open right there. This is the close of Monday. Here, that's the close of Monday. Back up between this 3 candle model. Now we know price is trying to get up here from here on out. So what do? You wait for any type of purge into a key level. Where is one? Bang. Right there. Soup into a 1 hour BISI. Boom. Enter. And this is actually also an SMT with GU. Right there. And that's your scalp entry, intraday entry, to then catch price for the next day. Bang. Into the high. And that's how you get intraday move. Once you know the higher time frame, you can take the lower time frame. So that's how I want you to look at it. What else am I going to be going into? I wanted to go through the sequence. This case specifically doesn't have the cleanest sequence look. Pretty much just had a KOD. This can be considered the breaker. Here, last up close candle before the down move that then went back up. This is the candle breaker that you can expect. It did disrespect it and then S&T, which was the confirmation for it. So that's the entry. That's the breaker. The Model 1, it's not really there. The Model 1 that you'd want is off of this candle. This would be the Model 1. And you can see that price never came back and tapped it. But you got to also remember that this was an SMT. I'm not going to bring up GU right now because it can't be fucked. But possibly GU tapped the Model 1, creating this SMT because GU came down here, taking out this lower low, and possibly went into the Model 1, leaving EU to not do that. So you can consider that. But you do have the breaker being the second portion, and then the KOD soup is up here. That's the KOD, being just before London Open on the Wednesday. So then blast into the high at 8:30 news, because news follows the technicals. That's the video. That's enough sauce for today. If you did not write down everything that I fucking said today, bro, you was not going to succeed, bruv, because I just gave away so much sauce, bro. No one gonna watch this fucking video, but the people who do are gonna thank me later. Please take notes on this information. Go backtest it. Spend 2 hours backtesting it on a fucking Sunday afternoon, bro. Please backtest this because it's fucking facts. Always look in the perspective of a weekly candle. Look for open lows. Look for open highs. Focus on CRT. You have an objective, clear targets. Very simple. It's very simple. It's the patience to wait for these setups to appear and show themselves. That's the hard part. That's the hard part. It's the patience to wait for these setups. That's where it gets hard. Okay, so that's the end of the video. Please like and subscribe if you like the content, if you like the information that I'm giving, the value that I'm trying to give for free. If you want some more free shit, I also have a free PDF in the description. Click that link. I'm also trying to build a Discord. I'm trying to build a community of traders that like trading this way, like catching big moves, like being precise in the markets, and like to actually know what the fuck they're doing. And not just confused as fuck. Where am I? I don't know what's happening. I'm just fucking trying basic shit. Hopefully I make it, but we don't know. Traders that actually want to fucking make it. I'm also trying to build a community. So that's with the same link down below that you get the free PDF. Join if you want. If you don't want to, download the free PDF. Giving value either way. I'm going to leave it there. I'll be coming out with another video on Thursday. Psychology video. Last time I went over trading. And this next video, I will hopefully be going over something else that is affecting the masses that I've probably gone through and what I think about it and what is the best way to get over it. I haven't figured out the topic as of yet, but I'll be thinking about that in the next day or two. So until the Thursday's video, I wish y'all happy trading and peace.